currencies, which would reduce their dependency on the US dollar. The Common Market for Eastern and Southern Africa, or COMESA, has launched a digital payment system. It would allow the 21 member nations of the regional economic bloc to settle cross-border payments in local currencies, eliminating the need to convert them into hard currencies like the American dollar for international trade.
Welcome to AfriGlobal 24, your trusted source for breaking news, deep insights, and stories shaping Africa and the world. Stay informed, stay connected, and experience the news that matters. Right here, 24/7. Something historic is happening in Africa, a silent financial revolution that could change the balance of global power. For decades, African nations have traded, borrowed, and paid debts in the U.S. dollar, a currency that has long symbolized global dominance. But now, for the first time, a new chapter is being written. The Common Market for Eastern and Southern Africa, or COMESA, has just launched a bold digital payment system, one designed to bypass the U.S. dollar entirely. Its purpose? To allow African nations to trade with each other directly, in their own local currencies, using a new digital settlement platform that could redefine what economic independence really means. Across 21 member states, stretching from Egypt to Zimbabwe, Kenya to the Democratic Republic of Congo, this move is being hailed as a turning point for African integration. A moment when the continent finally begins to reclaim control over its trade, its money, and its future. For more than half a century, African economies have been bound to the U.S. dollar. Even when trading with neighboring countries, transactions often pass through American banks, adding layers of cost and dependence. A Kenyan company buying goods from Zambia might pay in dollars. A Zimbabwean importer purchasing wheat from Egypt would first convert local currency into dollars, losing value in every exchange. This system benefited one side, the dollar itself. It kept African nations reliant on foreign reserves and external approval. But it also slowed intra-African trade, making the continent's markets more connected to Europe and America than to each other. Now, COMESA's new digital system, the Regional Payment and Settlement System, RPSS, aims to end that cycle. It's a secure digital infrastructure that enables instant transactions between African central banks, allowing payments in local currencies to settle within hours, not weeks. No dollar, no SWIFT codes, no foreign intermediaries. Just Africa, trading with Africa. The idea might sound technical, but its implications are monumental. By reducing dollar dependency, African nations are protecting themselves from the shocks of U.S. monetary policy, interest rate hikes, currency shortages, and inflation triggered thousands of miles away. When the dollar strengthens, it makes imports expensive and debt repayment unbearable. By creating an internal payment ecosystem, COMESA is effectively saying, we will no longer let our economies be collateral damage in global finance. And it's not just about economics. This is about sovereignty, financial independence that could reshape Africa's role in the world economy. Every year, African nations lose billions in transaction costs, currency conversions, and banking fees tied to foreign systems. The RPSS platform seeks to keep that wealth circulating within Africa itself. For traders and small businesses, it means faster payments, fewer losses, and more predictable prices. For governments, it means stronger regional trade and reduced exposure to dollar fluctuations. The numbers are staggering. Intra-African trade represents only 15% of total African exports, compared to 60% in Europe and nearly 70% in Asia. But analysts believe that with digital platforms like RPSS, that figure could double within the next decade, creating millions of jobs and unlocking Africa's vast market potential. What makes this even more groundbreaking is that COMESA's move isn't happening in isolation. Across the continent, regional blocs are aligning behind similar systems. In West Africa, ECOWAS is moving toward a single currency, the ECO. In the South, the Southern African Development Community, SADC, has already launched its own integrated payment network. And now, with COMESA's digital platform operational, more than half of Africa's population is participating in what some are calling the birth of a continental financial ecosystem. It's a quiet revolution, digital, sovereign, and African. For decades, the U.S. dollar has been the backbone of global trade. But recent geopolitical shifts, sanctions, global inflation, and the weaponization of the dollar have made countries around the world rethink their dependency. From Russia to China, India to Brazil, major economies are looking for ways to de-dollarize international trade. Africa's decision to follow this path marks a profound realignment. It's not about rejecting the dollar entirely, but about reclaiming choice. A continent once dictated to by external financial systems is now building its own. At the heart of this transformation lies technology. The COMESA digital platform is built on advanced Fintech architecture, ensuring security and transparency between central banks. It uses blockchain-inspired verification and encrypted communication, giving participating nations real-time visibility into transactions. This digital foundation could pave the way for a future African digital currency, shared across multiple nations, rooted in local control. For Africa's youth, the fastest-growing and most tech-savvy generation in the world, this moment is deeply symbolic. It signals a future where innovation is not imported, but created at home. When COMESA officially announced the system's rollout, regional leaders described it as a step toward true African unity. It is part of a larger movement driven by the African Continental Free Trade Area, AfCFTA, the largest trade agreement in the world by participating countries. Together, these initiatives could weave the continent into a single digital market, where goods, services, and payments flow freely without foreign gatekeepers. The human impact of this financial transformation is enormous. For the farmer in Malawi exporting maize to Tanzania, for the textile manufacturer in Ethiopia selling to Zambia, for the tech entrepreneur in Nairobi providing services across borders. Every transaction becomes faster, cheaper, and more secure. And more importantly, it builds confidence. Confidence that African trade can thrive within Africa. Global analysts are watching closely. Some applaud the move as long overdue, a logical evolution for a continent with so much economic potential. Others see it as a challenge to establish systems of financial power. But one thing is clear: Africa is no longer waiting for permission to innovate. From digital currencies to blockchain systems, from resource control to trade integration, the continent is stepping into a new age, one that promises to rewrite centuries of financial dependency. As one COMESA official put it, Africa doesn't need to beg for inclusion anymore. We're building our own system, and the world will have to connect to us. This is more than just a financial innovation. It is a declaration of independence, an act of collective courage by a continent that has had enough of external control. Africa is not just ditching the dollar. It's embracing itself, its people, its power, and its potential. And as COMESA's digital revolution spreads, the question is no longer if Africa can lead, but when the world will catch up. For decades, the world has known one currency as the uncontested ruler of global trade, the United States dollar. From oil in Nigeria to gold in Ghana, from imports in Kenya to exports in Egypt, it has been the invisible thread linking the economies of Africa to the banking halls of New York, London, and Washington. It was a relationship built on convenience, but sustained by dependence. A system where Africa's wealth, minerals, crops, and raw materials was priced in someone else's currency, cleared through someone else's banks, and settled under someone else's rules. But today, that story is changing. A quiet revolution is unfolding across the African continent, one that challenges the very foundation of global finance. In a move that has stunned the world's economic powers, the Common Market for Eastern and Southern Africa, known as COMESA, has officially launched a new digital system designed to let African nations trade without relying on the U.S. dollar. It is a moment of transformation, years in the making, and it began not in the skyscrapers of Wall Street, but in African capitals determined to reclaim control over their financial futures. The Common Market for Eastern and Southern Africa represents 21 nations, stretching from Egypt in the north to Eswatini in the south, and from the Indian Ocean coast to the heart of the continent. Together, they account for a population of more than 600 million people and a combined GDP exceeding $900 billion. Yet for all their potential, these nations have long faced a single, persistent barrier: the dominance of foreign currencies in intra-African trade. Even when two African countries traded directly with each other, Their payments had to pass through foreign banks, mostly in Europe or the United States, using the dollar or the euro as intermediaries. This meant slower transactions, higher fees, and enormous dependence on the Western financial system. But more importantly, it meant that Africa's economies were exposed to fluctuations in exchange rates, foreign inflation, and global politics far beyond their control. COMESA's new digital platform aims to end that dependency once and for all. Known as the Digital Retail Payments Platform, or DRPP, it allows countries to settle transactions in their local currencies through a secure, real-time network managed entirely within Africa. No dollar conversions. No external intermediaries. No Western oversight. The implications are immense. For the first time, African exporters and importers can trade directly across borders without needing to exchange their currencies into U.S. dollars. A Kenyan farmer can sell tea to Egypt and receive payment in Kenyan shillings, while the Egyptian buyer pays in Egyptian pounds, both converted instantly through COMESA's integrated settlement system. The result is faster trade, lower costs, and, above all, sovereignty. To understand how revolutionary this is, it helps to remember how Africa's economic structure was built. For much of the post-colonial era, African countries were integrated into a global trade model where they exported raw materials and imported finished goods. This system was financed, priced, and controlled by Western financial institutions. The dollar's role as the world's reserve currency cemented that arrangement, giving the United States and its allies a near-total grip over global liquidity. But as global power begins to shift eastward and southward, many African leaders have grown increasingly vocal about the need to de-dollarize their economies. The African Continental Free Trade Area, launched in 2021, was one of the first major steps toward continental economic unity. Yet, without a shared payment infrastructure, trade remained fragmented. That's why COMESA's initiative is being hailed as the missing link, the mechanism that can turn political ambition into economic reality. The Digital Retail Payments Platform isn't just a technical innovation. It's a political statement. It declares that Africa is ready to define its own financial architecture. Built in collaboration with the African Export-Import Bank, or Afreximbank, the system integrates with the broader Pan-African Payment and Settlement System, known as RPSS. This means that COMESA's 21 member states can now seamlessly connect with other African regions that adopt similar frameworks, laying the groundwork for a continent-wide payment ecosystem independent of the dollar. The benefits extend beyond convenience. By settling in local currencies, African nations can strengthen their monetary sovereignty and reduce vulnerability to external shocks. Exchange rate volatility has long eroded profits and deterred investment. Under the new system, regional trade can flourish without being dictated by the movements of the U.S. Federal Reserve or European Central Bank. And that freedom could unlock billions in new opportunities. Analysts estimate that intra-African trade currently represents less than 15% of the continent's total commerce, a fraction of the 60% seen in Europe or 40% in North America. Much of this gap stems from financial and logistical barriers, including currency conversion costs and reliance on foreign banks. COMESA's digital system could change that, creating a more fluid and resilient internal market. Yet the symbolism runs even deeper. For decades, the dollar has been more than just a currency. It has been a tool of influence. Through the global banking network known as SWIFT, Western powers have wielded financial dominance, able to isolate countries, freeze transactions, and impose sanctions at will. By building an alternative infrastructure, African nations are not only facilitating trade, they are insulating themselves from external pressure. This movement is not isolated to COMESA. Across the continent, there is a growing consensus that Africa must control its own monetary destiny. The Economic Community of West African States, or ECOWAS, has been developing its own shared currency, the ECO. The Southern African Development Community, or SADC, is also exploring integrated digital payment solutions. Together, these regional systems could eventually merge into a Pan-African digital financial network, a system that could rival the dollar's dominance in Africa within a generation. But the road ahead is not without challenges. Some member nations still lack the digital infrastructure to fully participate. Others are wary of cybersecurity risks or potential misuse. Maintaining interoperability between dozens of currencies and banking systems will require coordination, transparency, and trust. And while the system's independence is its greatest strength, it also means that African nations will need to ensure its security against external threats, both digital and geopolitical. Nevertheless, the momentum is undeniable. From Cairo to Lusaka, from Addis Ababa to Harare, policymakers are recognizing that true independence isn't just political, it's financial. And that realization is fueling a continent-wide transformation. The timing couldn't be more significant. Around the world, the dollar's supremacy is facing new pressures. In Asia, BRICS nations, Brazil, Russia, India, China, and South Africa are developing alternative payment systems and discussing a shared currency. In the Middle East, oil producers are exploring trade in local or regional currencies. And in Latin America, countries are experimenting with regional settlement mechanisms. Africa's move fits into a global pattern of de-dollarization, but it carries its own unique historical weight. For Africa, this isn't just about economics, it's about dignity. The continent has long been portrayed as dependent on external support, its financial systems seen as extensions of Western economies. But today, the narrative is shifting. By creating tools like the COMESA digital payment system, Africa is asserting that it can manage, regulate, and expand its own markets on its own terms. And the world is watching. Financial analysts in Europe and North America have acknowledged the system's potential to reshape trade flows. If successful, it could make African currencies more stable, more credible, and more widely used, not only across the continent, but also in global markets. For African businesses, the benefits are already visible. Exporters can avoid costly currency exchanges. Small and medium-sized enterprises, the backbone of African economies, can trade regionally without navigating complex banking barriers. Governments can strengthen their fiscal independence, reducing reliance on foreign reserves and debt. This transformation also has implications for Africa's youth, the continent's fastest-growing demographic. As digital payments expand, so too does financial inclusion. Mobile banking, fintech startups, and digital entrepreneurship are thriving, and the COMESA system could become the infrastructure that powers a new generation of African innovators. Beyond economics, there's a sense of continental pride attached to this achievement. For the first time, Africa's regions are collaborating on equal footing, designing systems that serve their people rather than foreign interests. It's a shift from dependency to agency, from borrowing to building. Some Western commentators have downplayed the move, calling it symbolic or limited in scope. But history often begins with symbols. The creation of the European Economic Community in 1957 was once seen as a minor regional effort. It later evolved into the European Union. COMESA's digital platform could represent a similar turning point, the beginning of Africa's journey toward continental economic unity. The question now is how fast this transformation will spread. If COMESA's system succeeds, it could inspire other regions to follow suit, eventually linking the continent's 54 nations into one cohesive financial network. And when that happens, Africa's position in global trade will no longer be defined by external currencies, but by its own economic power. This is more than a financial story. It's a story of awakening. A story of nations reclaiming their agency after centuries of economic imbalance. A story of leaders who refuse to let Africa remain a price taker in global markets. The COMESA digital retail payments platform may not dominate headlines in the West, but its impact will echo across boardrooms, ministries, and marketplaces. It's a sign that Africa's future will be written in African currencies, processed by African systems, and powered by African innovation. As the new system takes root, a silent revolution continues to unfold, one transaction at a time. From small traders on the streets of Nairobi to manufacturers in Lusaka, from energy firms in Egypt to exporters in Uganda, the power of financial independence is spreading across the continent. Africa is no longer waiting for permission to participate in the global economy on its own terms. It is building the infrastructure to lead it. And as the world adjusts to this new reality, one thing is certain. The era of Africa's financial dependency is fading into history, and in its place, a new, digital, sovereign Africa is emerging. You've been watching Afri Global 24, your window into Africa and the world. If you found this video informative, don't forget to like, share, and subscribe to stay updated on the latest stories shaping our continent and beyond. Hit the notification bell so you never miss a report. And join the conversation in the comments below. Until next time, this is Afri Global 24, bringing Africa closer to the globe 24 hours a day.